Very good morning to all of you. So, we are back with probably the last class of PGBP. So, we have covered all provisions of PGBP. So, what I want to do is preferably recap all that, whatever we have discussed, and solve some questions to see how good we are. Where do we stand as far as this PGBP is concerned? Um, uh, Today morning was an awesome climate here in Chennai, so it was raining heavily, and we all know that across India, this November December is a pretty cold climate. It's very good in that aspect, but however, if you actually look at it, it's very difficult to get up in the morning. So morning classes are always difficult because you are for so many of you it might be midnight, and so you will have to cope up with this, and it is more difficult task not just to keep yourself awake but also to focus. I truly understand that. We'll try to solve problems. Okay, we'll try to solve problems and see to keep ourselves active and focused throughout the session. So with that, what we will do today is typically we will try to refresh. We have been talking about refreshing, right? The whole session in some 15-20 minutes of refreshing every day will help you remember better. So it's amazing. Anand, you have worked in Ramco system in Chennai. That is amazing. I'm sure Chennai climate is not something to talk about because earlier those days are it used to be only hotter and hotter. There's nothing else across the year. But over the last few years, it looks like here and there now you see this windy climate, something like winter. So it's really pleasant out here during these days. But as I told you, when we feel that it's very pleasant, it makes it very difficult to get up in during these climatic conditions, right? So for all of us, so I don't think there is any exception to this. All of us will feel very difficult to start in the morning. Yeah. So with that, we will basically proceed with refreshing. Okay, we'll proceed with refreshing. So what we will do is we'll try to just put out all the sections that we discussed, and we'll see what is typically important for your exams and where do you really need to focus for your exams. So we'll start with first thing. So what did we do was we started with section what? We said it's a charging section. That's what drives this PGBP, which tells you what are all actually taxable, right? So we started with section 28. That is basically the charging section, which tells you what are all the incomes that will be taxed under section 28, right? So that there are plenty of lists listed out there. We have the profit from the business, and when it comes to modifications or termination of a particular agreement entered between the assessee and another person, so that is also treated as an income. We also saw that for doing nothing, if you're paid, that is abstaining from not doing anything, so that is also an income. Any drawbacks, duty drawbacks and all those things from customs, excise or whatever it is, we said that is also an income. So we spoke about several things. So with that, we discussed about the charging section, and then we went on to section 29. This, of course, if you ask me, it is not relevant because 29 is just a structure. Okay, 29 only tells you what are all the covered allowances and disallowances in this head of PGBP. So as far as your examination, if you talk about, no one is going to talk about section 29. I stressed in my slides just to tell you that 29 is the base section which tells you the structure, what is admissible and what is not admissible. So if you typically ask about the examination, it is not relevant, right? So that's what is for your examination. And we'll start with that structure discussed in 29. We started with what? We started with the sections where we spoke about allowances and disallowances. So the first area that we discussed was allowances, right? We discussed about allowances. So what was first thing? So we said section 30. Section 30, we need to remember the movie of Rajamouli, that is RRR, right? So RRR is typically rates repair. So we'll write rates repair, rent and insurance of what? building. Okay, so this is what we discussed in 30. It's a very straightforward section. It says if it is for business, if it is revenue in nature, please allow it. Okay, if it is business, if it is revenue in nature, please allow it. Only thing is you should have spent it. If you are a tenant, you can't claim an expenditure that the owner has spent for you. You can only claim what you have spent. So that's what it says. So whatever is it, you take it accordingly. And similarly, when it comes to insurance, across the chapter, we said only couple of instances for which you can actually take an insurance. That is damage or destruction. If it is building, it is damage or destruction of building. If it is plant and machinery or furniture, it is damage or destruction of that particular asset. Similarly, stock at later point in time when we discuss, that was also for damage or destruction. So the point is, it is for damage or destruction. It is for damage or destruction. So then we discussed about 31. What did we say in 31? Again, it's there, but there is no rates concept in things. So because plant furniture and furniture are not going to have, plant machinery furniture are not going to have rates and taxes, or rental is not covered in this particular thing. So what is only covered? You take only this and this. So repair and insurance of what? Plant and machinery and furniture. Okay, so these are the assets for which you can claim under section 31. Then we discussed about what? 32, right? So 32 was depreciation. So 32 was depreciation, where what did we say? 3 conditions, right? 3 conditions. We said it must be a specified asset. It must be owned by the assessee, partly or wholly owned by the assessee. It must be used by the assessee. So when we said specified asset, we discussed what all it is. Certain things not included is in intangible. We specifically said goodwill is not a fixed asset. Similarly, in your plant, we said animals, livestock, tea bushes are all not called plant and machinery. So that's what we discussed. When we said building, we said it includes these bridges, wells, river faces, and all those things are also included as part of building. So we discussed about this. So as far as what is depreciation, and when we said depreciation, we discussed about the rates. It is either full year or a half year. There is no proportionate based on the number of days. It is either full year or half year. So it is not like your Companies Act or general accounting. You give either full or a half. There is nothing else. So next was additional depreciation. When we said additional depreciation, it is about new plant and machinery purchased by an assessee who is engaged in the business of manufacturing, printing and publishing power generation units. So for these businesses, you are eligible for additional depreciation of 20%. So this is in depreciation. And in case if that is a new asset, less than 180 days, we said claim 10% this year, 10% next year. So that's for additional depreciation. What else is important things in depreciation? And then we went on with what? Actual cost, and WDV. So actual cost is defined under 43, clause 1. WDV is defined under clause 6 of 43. So 43 is a definition section. So we spoke about 3 rules, correct? And then we spoke about cost. It is 43.1. And then we discussed about WDV, that is 43.6. We spoke about exceptions, where all it differs. In cost, we said when it comes from the previous owner to the current owner for a building. And what about gift? What about will through will or something it has been transferred, gift or succession or will, what happens? So all that we discussed in 43.1. Okay, that is 32. Then we discussed 35, right? We skipped this T development reserve, all those things we discussed. Maybe you can go through. But as far as your examination is concerned, after this 32, the next important thing is your 35. So that is your scientific research. Scientific research. Again, here also it is 3, either for your own business or for your in-house research and development of a business engaged in biotechnology or any manufacturing other than 11 schedule items. So that is with respect to in-house research and development. The third one was paying to another company or an institute or an approved university or whatever. So approved laboratory, approved institution or approved association. So that payment to a third party. So that's what is there. So we again discuss as three. So it is what? Own. Then we can call it as in-house R&D, and then it was paid to, we keep it as third party, TP, that is third party. So this is what scientific research. What is the benefit? It is 100 percentage. Whatever you invest is basically claimed as an deduction. So that is about. What about now own? When we said owned, land is not included. Land is not included. When it comes to in-house research, land and building is not included. So that is what we discussed as far as your expenditures are concerned. So with this, we discussed about scientific research. And for both this depreciation and scientific research, whatever is unabsorbed, something that could not be adjusted with current year losses, can be carried forward for n number of years. So there is no limitations. There is no restriction as to how many years that you'll have to carry forward. Even if your business is not in continuance, you can still continue to carry forward. That is for depreciation and scientific research. And then we spoke about what? 35 AD, right? It was specified business. Specified business. So this specified business, we said from cold chain hotels, at least a 3-star hotel, and then hospital with at least 100 beds, then certain fish, agriculture, and all those things, beekeeping. Finally, we went on to say about infrastructure facility. All this business, 100% capital expenditure can be claimed. What is not allowed in this? There are 3 things that are not allowed. So it's basically again 3. How many things we remember this 3, right? There are so many sections which has 3 principles, 3 rules, 3 forms of payment. Everywhere you see this word 3, right? So 3 is something which is very easy to remember. Our mind actually tends to remember when you say 3. It's easy, right? 1, 2, 3, only 3 things that you need to remember. So it helps you. Probably Income Tax Act is framed in such a manner that everything talks about 3, right? So this specified business also, we said 3 things are not eligible. What did we say? Land, goodwill, financial instrument. So all this thing is not allowed, correct? Or not allowed. So this is what we discussed in specified business. So then what did we discuss? 35D. So that is what? Preliminary expenses. So now what is the next number? Next primary number. 3 is the one of the primary number. The next number to 3 is 5. So when we said preliminary expense, we spoke about play school, preschools, right? So you don't join schooling till the first 5 years. So it's like a preliminary phase in your life. It's called pre-education, right? So this education in the play school is quite important. The first 5 years of education is to just groom you as a kid becoming a person who is eligible to enter into a schooling age. So this 5 years investment, we said, will be written off over the next 5 years. So we compare this with the education system. So similarly, preliminary expenses, whatever you have incurred for setting up or before setting up, can be set off, can be write off over a period of 5 years from the time of incorporation, from the year of incorporation. So we said 5 years, which means it is 20%. We said there is a cap, that is 5% of cost of project or cost of capital employed. Cost of capital employed or cost of project, that is 5% of cost of capital employed or eligible expenditure. So whichever is lower is what you take it as total eligible preliminary expenses. On that you claim 20% per year. So that is 35D. Then we discussed about what? 35 DDA, that is VRS. So this is also what? 5 years. So whatever VRS expenditure incurred in that year, you see to that you are actually claiming it over a period of 5 years, 35 DDA. And then we spoke about 36. 36, we spoke about many things. Insurance. When we said insurance, we said stock and health of the employees. Then we said PF contribution. When we said PF contribution, employer contribution is allowed even if paid beyond the due date prescribed in the Act. Otherwise, it's not allowed. So PF, employee must be paid within the due date specified in the relevant Act. Only then you can claim it as an expenditure. But whereas your employer's contribution, it's not like that. It's not like that. You can even pay till the return due date filing. So that is what is your employer. So same way with gratuity, superannuation, whatever fund. So we spoke about those employees fund. Then something like bonus, interest. Okay. Then your what you call security transaction tax, commodity transactions. So all this we discussed in section 30. Oh yeah, we also discussed about family planning. So this is also how much? 20%. That is 5 years. So over 5 years, whatever family planning expenditure is incurred, you can write it off over a period of 5 years. So that is about family planning expenditure. That is 36. Next, we discussed about 37. That is, you have certain condition, right? It's not personal, then it's not capital. So it's not capital. Then what? It is for business. Current year. So it is incurred in current year, the relevant year in which it is there. Then we said it is lawful. Okay, we'll write it as lawful. Basically, it is not an offense or prohibited under the law, which means we discussed that currently in this recent amendment that has been explained, clarity has been provided to what do you actually mean by offense or prohibited by law. Now it is very clear that offense or prohibited by law is global phenomenon. That is in any law, not just India, even if it is banned under some other country. Let's say you are in Singapore, you have spent some expenditure for the Indian entity in Singapore, where that expenditure is not allowed, it should still be disallowed in India also because it is not okay. So when you say law, it is any law for that matter. So we'll just keep it simple. It should be lawful. So which means it should not be an offense or prohibited by any law, So that's what it is about. We saw an example, medical practitioners getting samples. So which is basically not an allowed expenditure. That is about your lawful thing. Okay. So these are the conditions which basically incurred. So, and of course, it should not be covered under 30 to 36, right? It should not be covered under 30 to 36. Only then it is covered. When you said it is for the business, it should have been actually incurred after commencement. So it cannot be preliminary expenses. So after commencement, the expenditure should have been incurred. So that is about for the business. So that is 37. Then we moved on to what? So these are all allowances, right? So with this, our allowances got completed. So all this is what we discussed about allowance. Now we spoke about disallowances. So disallowances, we first discussed 40A, that is your TDS disallowances, where we said 30% if domestic, 100% if it is foreign payments, that is international payments, right? So TDS is to domestic, other. So domestic 30% is disallowed, others 100% is disallowed. Then you also have this your salary on which TDS is not been deducted to pay to a non-resident. Again, it is 100%. So all this is what we discussed in 40. And of course, what else we discussed in 40? Any taxes, right? Any taxes, including surcharges, is not an eligible expenditure. So apart from that, we discussed about taxes. So any tax is not an eligible expenditure under 40. So we these are the things where we said it is basically not an admissible expenditure. And then we discussed about 40B. What is it about? It's about firms. Okay. So it is about interest and remuneration. So these two things, interest and remuneration, can be claimed as an expenditure to an extent. So what is the extent? Interest, it is 12%. Remuneration, it is a slab. First 3 lakhs, 90% or 1,50,000. 90,000 or 1,50,000. Balance 60%, right? So this is what typically you call it as your interest and remuneration eligibility. And when you say interest and remuneration, the conditions are it should have been prescribed in the partnership agreement. Please remember, it should have been prescribed in the partnership agreement. It can be paid only to a working partner. The remuneration can only be paid to a working partner, not for anyone else. So that is 40B. Then we spoke about 40A. What all we discussed? 40A2, which is related party transaction. Any expenditure with a related party transaction should be at fair market value. So anything excessive or unreasonable should be disallowed. We discussed about RPT. For your examination purpose, just focus on individual. As far as an individual relative of an individual is a related party. Any entity in which this individual has a substantial interest is a relative party. Any entity in which the relative has a substantial interest is also a related party. So these 3 conditions, just remember individual alone. Otherwise, it's the next slide where we discussed about the complete structure in one single slide. You can go through that. Please understand that also. But for your examination, what your focus is individual. So when it comes to individual, relative is a related party. Any entity in which individual or relative has substantial interest. So only these are important for your examination. So that is 40A2. Then what are we talking about? 40A3 and 3A. Okay. So where we said the cash transaction. So cash greater than 10,000 is not allowed. We saw exemptions in Rule 6DD. We segregated as small industries, government organizations, and then salary payments. So we split into various categories and finally categorized as other payments. So when you said small industries, cottage industry without aid of powers, something like handloom, then agriculture business, you can pay it with cash. Then we spoke about banking holidays. So if banking transaction, so where we said there is no bank in that location or it's a strike or a holiday on that particular day on which you have to definitely make a payment. So these days, these are completely okay. You can pay by cash. And next we said about salary payments. If it is about retirement or terminal benefits, up to 50,000 can be paid in cash. Above that is not allowed. And similarly, a person working somewhere else where he does not have a bank account, but he needs money there for spending and is working as an employee there in that location for more than 15 days, 15, then it automatically you can pay by cash. So that's what is there. Then apart from that, we discussed other things like paying to government, LIC, all these things are completely okay. Any loan transactions to the bank, all that is an eligible payment to be made by cash. So this is what an exception we discussed, exceptions to cash payment. So it is discussed in Rule 6DD. Okay. So that's what it is about, Rule 6DD. Then we spoke about what? Bad debts, correct? So you have bad debts where any bad debts. So any next is. We discussed about bad debts. So when we said bad debts, we said whatever is excess is basically not allowed. That is, you are eligible to claim bad debts, but only thing is subsequently, if you're receiving it in excess of whatever was written off as bad debts, should be written as an income. So in a future years, so you treat it as an expenditure. In future years, you might have excess bad debt. I'm writing under the, sorry, I'll just change this section. So 36(1). Okay. So this is also in 36. So probably it should come here. By mistake, I forgot that I'm writing under 40. I'm sorry. So excess bad debt should be allowed. Then subsequently, whatever is there should be treated as deemed income. In case if it is received excess, then it should be treated as a deemed income. So that is what about your bad debt is about. So bad debt is actually 36. By mistake, I'm discussing it after 40A3. I'm sorry. So we'll continue with 40A3, whatever we are talking about. Just that I'll change. Okay, so continuing further, 40A 7 and 9, it is basically provision. Okay, provision of gratuity funds is basically not allowed. So 40A 7 and 9. So this is what was discussed in 40A 7. Then you discuss 43B. 43B was payment basis. So payment basis, you spoke about what bonus, then again PF, taxes, then your interest, then railway assets. So all this can be allowed only on payment basis. When it comes to interest, conversion of interest is not a payment. Only then it is ultimately paid will be treated. So this what is there? Interest is basically for state-owned financial institutions or public banks and other things only. It also includes NBFCs, cooperative banks, other than the primary cooperative society or agriculture cooperative society. Primary agriculture cooperative society alone is not considered. So that is 43B. So to just simply remember 43B, these expenses are allowed on payment basis as far as your exam is concerned. So these are the sections that we have discussed. And finally, we discussed about what? Section 41. We discussed about section 41, that is deemed income. So what does deemed income says? An income such as something like your scientific research asset, or your what you call your bad debts being excessively received, all these are classified as deemed income. Apart from that, we discussed about remission or cessation, that is something which is no more a liability. So this is what in total we have discussed over the days for all the PGBP thing. So starting from section 28 to till 43B, we have discussed everything else. Apart from this, what did we discuss was 44AA, maintaining books of accounts. 44AB was tax audit. When is an audit required? Then we spoke about presumptive taxation, that is AD, ADA, and AE, all three as a comparison. In one single table, we understood all these three sections. So these are all what was discussed in your thing. So now, as far as we need to just get practice with our examinations, whatever it is, you should get practiced as such in your examinations. So solving more problems will help you out at that. Dhyanesh, rates of depreciation, which are going. See, the rate that I've given is what is very important. Mostly, if it's something else, probably they'll give you the depreciation rate also. That's how it generally works. So I think we can stop it with whatever was given in the table that I've provided. So Geet, bad debt is 36. I'm sorry for that. By mistake, I started writing in 40A. It actually comes to 36. Kavita, how TDS is domestic? TDS is not domestic. What I'm trying to say is for domestic payments, that is, which are not foreign payments. We said the first category of TDS disallowance is about international payments. So anything other than international payments, I'm just calling it as domestic payments. When you say domestic payments, it is paid within India. Payments for transactions within India, you will see what are all the payments for which you are supposed to deduct TDS in the chapter of advanced tax and TDS chapter. So you will see that. So for business purposes, what we need to understand is TDS is basically classified into the other than international payments. So that's what we are calling by domestic, and this other is basically international payments. If it is international payments such as royalty, technical fees, or interest, whatever it is, 100% of expenditure is disallowed if TDS is not deducted. Where basically, if it is about other payments other than international payments, be it contract, be it professional fees, or whatever it is, if you have not deducted or not deducted and paid, then it is 30% of the expenditure should be disallowed. Deemed income is basically, we have seen here and there, for example, bad debts, whatever is received in excess. Earlier, you have allowed bad debts as 4 lakhs, but now you have received excess of 1 lakh, which means that 1 lakh is an income. So that we discussed in bad debt section. Similarly, scientific research, we said whatever sale consideration or deduction provided under 35, whichever is lower will be considered as an income. So that's what we discussed for scientific research. Apart from that, any liability that ceases to be a liability, remission or cessation of liability is also a income, deemed income under section 41 clause 1. So this is about deemed income. Okay, so we'll try to solve some problems and try to get better grip on the chapter as a whole. Okay. So we'll start with a problem for 44 AD, what we basically discussed in the last section. So Mr. Praveen is engaged in retail trade and he reports a turnover of 1.98 crores, right? So let me put it back again. Let me repeat it again. See, basically, your exam question, go word by word. Some words give you extra information. Some words are irrelevant. So what you need to do is look into a perspective where it's typically you need to know whether it is required for you, not required for you. Now, for example, something talks about turnover, which means it is relevant because based on turnover, you decide whether tax audit is applicable or not applicable. So that's what we decide. So it is 1.98 crores for the financial year 22-23. His income from the said business as per books of accounts is 13.2 lakhs. So again, we'll have to see whether this is important. Of course, it's important because if it's presumptive, you're going to apply the rate only on this gross income, right? So that is 13.2 lakhs. And then what? As per the provisions of chapter 4D. 4 is nothing but your business section. 4D is the chapter for profit and gains from business or profession. Retail trade is the only source of income. So he doesn't have any other source of income. Assessment year 22-23 was the first year where he declared his business in accordance with 4480. So his first year of business was 22-23. He has declared. So now please understand whether these are relevant. Assessment year 22-23 is the first year. And he has declared provisions under section 4480. So these are key words that are important to understand the question. Now we'll move on to what is the requirement. Is Mr. Praveen also eligible to opt for presumptive determination? So the first question is, can he opt 4480? Is he eligible to prefer 4480? That's the first question. Next question is, if so, what will be his income from retail trade as per the applicable relevant presumptive provision, assuming the whole trade represents cash receipts. Keyword, relevant, not relevant. Is the word relevant? Not relevant. The word is very much relevant. Why? Because if it is cash receipt, it's a one rate. If it is digital receipts, it's another rate. So 8% for non-cash, non-digital receipts, 6% for digital receipts. So that's what we are talking about. So what we are talking about is cash receipts. So which means what we need to apply is 8%, not 6%. In case Mr. Praveen does not opt for presumptive taxation, please understand the next question. What if he is not opting presumptive taxation? What are his obligations under Income Tax Act 1961? Okay. Now we'll go one question at a time. What does it first say? It says, is he eligible to opt for presumptive determination? So what is the limit, turnover limit specified for presumptive taxation under section 44 AD? So what is the limit? It is 2 crores. The limit is 2 crores. So up to 2 crores, a person can opt for presumptive taxation under section 44 AD. If it is profession, it is 50 lakhs. We are talking about a retail trade, which is business, which falls under section 44 AD. So which means that 44 AD, you can claim at 8% of your total income as a presumptive taxation. So for the first question, yes, Mr. Praveen is eligible for opting presumptive taxation under section 44 AD because his income, his turnover for the previous year 22-23 is less than 2 crores, does not exceed 2 crores. In fact, the exact word is does not exceed 2 crores, which means up to 2 crores he can opt. So is turnover does not exceed 2 crores. Please understand there is a difference between does not exceed 2 crores and less than 2 crores. So what you need to state is does not exceed 2 crores. So that's what it is about. So for the financial year 22, he is eligible to opt for taxation. He is eligible to opt this presumptive taxation because his turnover is less than 2 crores. Okay. And then if so, determine his income from retail trade as per the applicable presumptive provision, assuming that the whole turnover represents cash receipts, which means he has to represent how much? It will be 1 crore 98 50,000 into 8%. So how much will that be? 1 crore 98 50,000 into 8%. So that is, so 15,88,000 will be his income because it is 8% as he has received it in cash. And what if Mr. Praveen does not opt for presumptive taxation? When it comes to presumptive taxation, under 44 AD, once you have started following, you'll have to comply for 5 years. So the first year in which he actually claimed was previous year 21-22, correct? That's the first year in which he has actually claimed. So it says assessment year 22-23. So we'll just keep it as, I'll just write it as assessment years itself, not to confuse. So assessment year 22-23 was the first year. Now from here, he must follow this for 5 years. So it is 24, 25, 26, 27, 28, right? So assessment year 20, 27, 28. He must follow this for 5 years. If in one of these years, if he is opting out of presumptive taxation, if he is opting out of presumptive taxation. For example, the question says, what if he does not opt for presumptive taxation, which means he is opting out, correct? Which means he is opting out. So what happens? When he is opting out, when he is generally opting out, opt out in which year? Assessment year 2023, 24. The rule is for the next 5 years, he cannot opt again presumptive taxation, and he should also maintain books of accounts under section 44A. So again for 5 years. So that is 25, 26, 27, 28, 29. So till assessment year 28, 29, he cannot opt again, and he must maintain books of accounts under section 44AA. So that is also important. So what is the rule? So if he has opted back till this period, for this period from the assessment year 23, 24, he is opting out. So which means from 24, 25 to 28, 29, he must maintain books of accounts under presumptive, regular books of accounts, that is 44A, which means he is not eligible to offer presumptive taxation. So he must maintain books of account under section 44A. So what we need to say is, he need to maintain books of accounts since he has opted out in this particular year. And once he has opted out, we need to check for his tax audit limit also. So during this 5 years, he might be eligible for tax audit as his income exceeds the basic exemption limit, the 1 crore, because he is completely receiving it in cash. So since he has exceeded this 1 crore limit, he is also eligible for audit under section 44AB. So we must first convey the provision where it says, generally, since Mr. Praveen has opted for presumptive taxation in assessment year 22-23, now once he must follow this for the next 5 consecutive assessment years. He must follow this for 5 consecutive assessment year, which is for this period, that is 23-24, 23-24 to 27-28, 23-24, 24-25 until 27-28. For this 5 years, he must mandatorily follow 4480. In case if he is opting out in one of these years, then 5 assessment years consequent to not opting, he must he cannot opt back again. So he cannot opt back again for 44 AD. So for this period, that is assessment year 24-25 to 28-29, he cannot opt presumptive taxation, which means he has to maintain books of accounts under section 44AA and is subject to tax audit under section 44AB as his turnover has exceeded the basic exemption limit for 44AB. So that's what it is about. So that's the answer that you need to give basically for your this question. That is the next last one that we were talking about, right? Okay, so that is illustration 16. So that is about what? It is about 44 AD. Though she defunct business. So defunct business is something like sick industry. That is, they are not able to operate anymore. They are not able to operate anymore. So they are like collapsing. They are going to shut down or something. First part again, okay, is this you're calling it as first part? If this is what you're referring to as first part, we are trying to say, is he eligible to opt? Since his turnover is less than 2 crores, since his turnover is less than 2 crores, he is eligible to opt for presumptive taxation in assessment year 23-24. So the limit for 44 AD is 2 crores. So up to 2 crores, you can opt for presumptive taxation. Okay, so we'll move on to the next question. So the next question is basically excess commenced operating goods vehicle. Okay, so what section it is? 44 AE on 1st April 2022. So this year only has commenced. He has purchased the vehicles, following vehicles during 22-23. They want us to compute 44 AE income. So what is it? They have given the dates, they have given the number of vehicles and the weight in kgs. Why is weight in kgs relevant? Because there are two concepts, heavy goods vehicle, others. Which vehicle is called as heavy goods vehicle? If the weight of the vehicle is more than 12,000 kgs. Okay. The rest of the thing are called as your other vehicles. So the heavy goods vehicle, basically only these two. Correct. Only these two fall under heavy goods vehicle. Rest are all will be categorized as your regular vehicle. So now we need to compute the number of vehicle. There is nothing about sales. So he has only purchased. He has not sold anything. So during the year, what happened? He has started purchasing from 10th April. The last vehicle is purchased in March 23. So it's typically 3, 6, 7, 9, 10. So he has only 10 vehicles. It should not exceed 10 vehicles. He can always have 10 vehicles. You should only not have more than 10 vehicles. So now we need to see how many is heavy goods vehicle, how many is your regular vehicle. So we'll try to understand. Particulars, okay, count. That is how many vehicles that you're talking about. Then we'll call it as usage. How many months have you used? How many months have you used this asset? And then we'll probably call it as income. Okay. So particulars, first we'll call it as heavy goods vehicle. We'll just see heavy goods vehicle. So as far as this heavy goods vehicle, 2 and 1. So 2 is held for how many months? August 22. From August 22, we'll calculate separately for heavy goods vehicle alone. So first is purchased on 29th August 2022. So count is 2. Usage is how many months? It is basically usage is from August, right? Even part of the month should be considered. So even if it is 29th August, it is 1 month. So August, September, October, November, December, January, February, March. So 8 months. So usage is 8 months. So which means 16. We'll call this as A, B. So C is basically what? A into B into, okay, when it comes to your heavy goods vehicle, we should also know the weight. So we'll write the weight separately here and then write income. So weight and income. Weight we'll refer it in tons. Okay, we'll refer it in tons because per ton it is 1,000. Per ton it is 1,000. So weight of this is both the vehicle is 15,000 kgs, which means it is 15 tons. So this is A into B into C into 1,000. Correct. So 1,000 per month. So he has two vehicles, 8 months. 15 is the number of tons. So per ton it is 1,000. So what will be 2 into 8 into 2 into 8 is nothing but 16. And then you will have to multiply it by 15,000. So 2,40,000. And next vehicle, he owns it on first. One vehicle is on February 23. So 23 February 23, one vehicle usage is only 2 months. It is February and March. And then this is also 15 tons. So it is 2 into 15, 30,000. Okay. So the total from heavy goods vehicle is 2,70,000. Now we will move on to other vehicles. So as far as other vehicle is concerned, it is 7,500 per month. So we'll write first one, that is 10th April 22. So 10th April 22, we are talking about what is the count? It is two vehicles. Usage of month is 12 because they are purchased in April itself. Weight is not applicable for this, right? So it is not relevant. If you want, you can write, but of course it is not relevant because for this the formula will be A into B into it is 7,500 per month. 7,500. So what happens? 2 into 12, 24 into 7,500. So it is 1,80,000. So you compute separately for both the vehicles. Then 15th March 2023. It is one vehicle. A number of months is only one because it is on March only. So it is what? 7,500. Next is 16th July, three vehicles. So 16th July 22, three vehicles. So which means 9 months, right? If it's from July, it will be 9 months. So 27 into 7,500. That will be 2,02,500. Next vehicle is 2nd Jan 23. How many vehicles? One vehicle. So he has been using it for 3 months. So 3 into 7,500. So it is 22,500. Okay, so we have completed all this vehicle. Okay, so that's it. So now what is it from heavy goods vehicle? It is 1,87,500. 187,500 plus 2,02,500 plus 22,500. So that is 4,12,500. So 4,12,500. So total is 4,12,500 plus 270. So it is 6,82,500 will be his total income. 6,82,500 will be his total income. Is what is the total income for that year. So that's how we have computed. So what if there is one more question which says, what if the goods vehicle purchased on April 22 were put to use only in July 22? Okay, so this is critical because when we speak about depreciation and all, we say when it is put to use, depreciation is eligible from the period it is put to use. But when it comes to this 44AE, the word used in the provision is owned by the assessee. It only talks about ownership. It does not talk about usage. So which means even if you have kept it idle for the entire 12 months, it is completely fine. You still have to claim. So they say that doesn't matter whether you have used it in July or not. What is relevant in 44AE is the use. So it says the answer would not change because the presumptive income is based on ownership and not on usage. So this is what you need to convey in the provision. So it basically says it is about owned by the assessee and not used by the assessee. So the word in the provision is owned, not used. So please remember the word is owned and not used, not used. So which means owned. So ownership is from April. Usage is irrelevant. So that's what it is about. Okay. So with that, we have done with this question. The next topic that we discussed was about tea, coffee, rubber, right? Subhash, since his turnover is more than 1 crore, will he be liable to 44AB even if he choose? No. Once you choose 44AD, 44AD, AB is not applicable. AD is not applicable. So once you are eligible for AD, once you have satisfied all the conditions in AD, even if your turnover exceeds 1 crore, you are not eligible for 44AB. So there is an exception where if you have chosen presumptive, there is no books of accounts. There is no books of account, which means there is no audit also. The concept of presumptive is no maintenance of books of accounts. Once there is no books of account, which means there is no audit also. So that's what it is about. Usage. See, that's what, Kavita, the usage that we are talking about, when you talk about this goods vehicle, okay, when you talk about the goods vehicle, let's say you have purchased a vehicle. You did not even take it for one trip during April, May, June. Only in July you took for the first trip. So the vehicle is ready from day one, but you did not use it. You kept it idle. Only in July you are using it, which means you are riding it for the first time. You have taken it for a trip for the first time. So that is not relevant because 44AE talks only about ownership and not about usage. Okay, so with that, we will move on to the next question. Illustrate 18. Okay, so the illustration 18 talks about this partly agriculture, partly business. So that concept that we said, called as composite income. So it has both business income and agriculture income. Even in depreciation, we said if it is composite income, on the whole business, you compute depreciation and then proportion that 40 or 60%. So that's what we discussed in depreciation heading also. Now what we are talking about is about computing this composite income for this business. So what should you do? You should know about what is your nature of income, how much is business, how much is agriculture. So we'll write it as particulars, business, agriculture. Okay. In this particulars, what I am doing is I will classify it as two things. Okay. That is proportion income. So I need to understand how much is my proportion, how much will be considered as my business income. Of course, the balance is your agriculture income. Whatever is not considered as your business income will be considered as your agriculture income. So you need not write the proportion there. If you want, you can write that also. There is nothing wrong about that. So basically, now what are we talking about? We are talking about the first business. We'll take about the first business. It is about centrifuged latex. So that is for rubber plants. So income from sale of centrifuged latex processed from the rubber plants grown in Darjeeling. Now, let me repeat my words. What did I say? Certain words are confusing, certain words are relevant. So now this Darjeeling, where are they operating is important because why? Because composite income, agriculture income can be considered only for the land in India. You cannot say I did somewhere outside India and I'm still earning it as business and agriculture. It's not like that. So it is only for lands in India. This rubber, tea, coffee, what we discussed is only for what is happening in India, not happening what is outside India. So now it is in India, so it is okay. So as far as this rubber business, so for rubber business, what is the proportion? So for rubber business, it is 35 and 65. That is 35 is business, 65 is income. We said classify as four. So basically, the first thing is rubber. Next, we said, so first is rubber. Next, we said coffee as two. Coffee without roasting, coffee with roasting. Okay, coffee without roasting, with roasting. Then tea. So for rubber, we said 35, 65. For coffee, we said 25, 75. That is coffee without roasting, 25, 75. Why? Because when you say without roasting, it is more agriculture. It is more agriculture. When you say with roasting, it is less agriculture. So it is 40, 60, 40, 60. And the balance tea grown is, of course, 40, 60. So that's what it is about. So rubber is basically 35, 65. So I write 35% as your business income. So what is the business income that is provided for me? 3 lakhs. So on 3 lakhs, I compute 35%. So which is 1 lakh 5,000. So the balance, of course, 2 lakh 95,000, right? 2 lakh 95,000. Next business they are talking about is income from sale of coffee grown and cured, which means it's without roasting. Without roasting, grown and cured, which means without roasting. So coffee I'll just call it as grown and cured itself. Coffee grown and cured. Okay. So what is the ratio? It is more agriculture, which means business is only 25% of how much? 1 lakh, right? 1 lakh. So it is 75,000. Here it is 25,000. Coffee grown and cured. So what is the next thing? So we have done this. We have done this. Next is what? So this income from sale of coffee grown, cured, roasted, and grounded. So which means it is less agriculture. So the 40, 60 applies where? In Colombo. In Colombo. When you say Colombo, what does it mean? It is outside India. It is outside India. So it is 0% agriculture. 0% agriculture. So this doesn't fall under composite income. So I say coffee roasted. I'll just call this nil. I'll just write the entire amount because it doesn't come under the concept of composite income. So I straight away take the total value of 2,50,000. Okay. Next, what is there? So this we have completed. Income from sale of tea grown. Okay. Tea grown in Shimla. So it is eligible. So tea business. Tea is again 40, 60. How much is the amount? 4 lakhs. So 4 lakh is 1.6 lakhs, right? This is 2 lakh 40,000. Next is income from sapling, seedling, nursery grown in Cochin. Otherwise, everything else is basic operations are not carried out by year on land. So what technically happens here is this 80,000. When you would have studied this agriculture income, this exempt income chapter, one concept of agriculture, this business of sapling and seedling. So the sapling and seedling is something like, if you remember, certain places where you go and buy these plants, they will have it in small pots across the huge land where they don't do anything on the land. They just keep the pots, sell that plants as it is. So the question came out whether this was agriculture or not agriculture. But then the court went on to say, yes, this is agriculture. Then income tax also was amended to clarify that sapling and seedings will be treated as an agriculture income, even though if it is not happening in the land, even if it is not happening in the land, it is still agriculture income. So this sapling and seeding, 80,000 is entirely agriculture income. Okay, entirely agriculture income. So now what happens? My total. So I take the total. Okay, so total income. Okay, total income. Business income is 180, 430, 590. And here it is 3 lakh, 320, 560, 640. So 5 lakh, 90,000 and 640. So this will be treated as your, I think I made a mistake here. So I've written it reverse. This is 25,000. This is 75,000. Correct? Everywhere else I've written it correctly, right? Yeah. So I'll do a read total. So it is 130, 380, 480, 540. So it will be 540, 3,70,000, 410, 610, 690, right? 590, sorry. 590. So this is not 2, this is 1. So it is 5,90,000. So as I told you, whenever we are making mistakes, try to correct it in a different thing, preferably red, because you know that you have made a mistake. Next time you are not supposed to do. We all do it in urgency. We all do it in when it comes to exam. We are going to have a very short time where you need to focus. So when do you start focusing? When you start correcting your mistakes and becoming efficient. How do you correct your mistakes? When you start marking it in red, striking off and writing it red, say that you have made some mistake. So I've made some very arithmetical error. It happens to all of us. So if you actually see, the number here was 3 lakhs. So what I did was, here I have written 1,05,000. When I subtracted, I wrote it 2,95,000 as if it's 4 lakhs. The number is 3 lakhs. So which means it should have been 1,95,000, not 2,95,000. That was a mistake. Again, here I've written 25% here. By mistake, I wrote 25,000 here instead of here, right? So which means again, it's a mistake. So we tend to make these mistakes. It's not about knowing the provisions also. We tend to make mistakes, arithmetical mistakes also, so which might end up in a big loss. So please focus and write it. When practicing, whenever you make a mistake, please strike it off and write it in red so that you have a better grip, better efficiency. So that's what it is important about. So with that, yeah, that question is over. I'm sure some of you would have pointed my error for sure. Yeah, some of you have said Vashishta, Dhyanesh, Nikita. I'm sorry, it was not 2,05,000 Arpita. It is 195. So many of you, I think I noticed it only at the end of the thing. Renu has pointed out that 25,000 should have been put here. Yeah. Abdul, if sapling and seeding is outside India, see, agriculture income is treated as agriculture income only if the land is in India. So any activity outside India will not be considered as an agriculture income. So it becomes a taxable income. Kavita, second point explained again. Was it about grow coffee roasted or something else? Which was the second? You want this, right? See, in coffee alone, there are two things, right? Grown and cured. Grown, cured, roasted, and grounded. Okay. So when we speak about this, we'll keep it this manner. Coffee alone, it could be roasted, not roasted. When I say not roasted, it is just grown and cured. So for not roasted, it is more agriculture. For not roasted, it is more agriculture. So 25% is business and 75% is agriculture. But when it comes to roasted, it is less agriculture, more business activity. So it is 40% business. So there is only we have this classification. Otherwise, it is straightforward. Rubber is straight away 35% business. Tea is straight away 40% business. So all this is straightforward. Yeah, I think I've corrected all those mistakes, right? So 1,95,000 and all those things. So it's 540 and 590. Okay. So with that, we have completed this question. We'll move on to the next question. Mr. Venus, engaged in manufacture of pesticide, furnishes the following information for a manufacturing unit. Please understand what is important here. He is in the business of manufacture. Why is it relevant? Because we need to know whether we need to provide any additional depreciation or something of the kind. So the activity is important. So they have given the WDV of plant and machinery on 31st March 2022 is 30 lakhs. Depreciation including additional depreciation for previous year 21-22 is 4.75 lakhs. New machinery purchased on 1st September is 10 lakhs. New machinery on 1st December is 8 lakhs. So this is relevant, right? Which date you are purchasing? 8 lakhs. Computer purchased on 3rd Jan 2023, that is 4 lakhs. So what are the additional information? All assets are purchased by account paycheck. What section are they talking about? 40A3. All assets are put to use immediately. So there is no two different dates. New machinery purchased on 1st December and computer have been installed in office. So these two are office. So they say that these are for office purposes and not for factory purposes. During the year 31st March 22, a new machinery had been purchased on 31st October 21 for 10 lakhs. Additional depreciation beside normal depreciation has been claimed thereon. And depreciation rate is 15%. So they say use 15% for depreciation for the whole thing. So now we need to compute the depreciation for depreciation available for the assessee for income tax act and the WDV of different blocks of asset. I think the entire thing is only one block, so we have to start with the respective thing. So how do we start this? So we start with okay. So we start with particulars. Amount. You can have a reference column here. Okay. So first we have to understand what is the WDV on which depreciation must be calculated. So we take opening WDV. So opening WDV is 30 lakhs. 30. Add additions. There is no sale of assets. So what are the additions in total? The total thing is new machinery purchase is 10 lakhs. So new machinery purchased is 10 lakhs. What are the other assets? 10 plus 8 plus 4, right? So it is 18 and 22. 10 plus 8 plus 4 is 22. So 10, 8, 4. Are there any other assets? No. So it is 22. So those are the additional assets. So which means my opening WDV, I add the depreciation. So that's what you actually find it for your 30 plus thing. Only thing is the WDV provided here. I'm sorry, I'll explain you a different concept and then come back to this. See, when we speak about this WDV, we said WDV is something which is before depreciation, So whenever question provides depreciation of this period, which means WDV is before giving depreciation. So we'll have to provide to find out 1st April. Please understand the date here, it is 31st March. So to arrive at what we need is we need WDV as on 1st April 2022. So what we do is we take WDV on 31/3/2022. Please, the question, if this itself is 1st April 2022, which means it is after depreciation. The question has confused you by using the word 31st March 2022, which means on that you will have to provide depreciation. So 30 lakhs less depreciation for previous year 21/22, that is 4.75. So now you get WDV on 1st April 2022. On this only you need to provide depreciation. So now what happens? You'll have to provide 25.25. So 25.25 is the thing. On this you add what? Additions. So you add cost under section 43.1 for new assets. So new assets. So what is that? What are the assets? First was machinery. Second is again machinery. Then finally computer. Correct? So it was how much? 10, 8 and 4. 1st September, 1st December, 3rd January. 1st September, 1st December, 3rd January. So this is 10, this is 8, this is 4. Now with this, what you get? You basically get the total WDV for the year end. Total WDV for the year end. So this is 25.25, 35, 25, 22, right? So 47.25. 47.25. So in total, you have 47.25 lakhs of asset. So for this, you are going to compute depreciation. Now for depreciation, it is plant and machinery and computer, right? Because this alone is a different block. This alone is a different block. So what you do, you start with first opening thing, that is opening, that is WDV. Your WDV for this is 43.25. This is 4 lakhs, right? For computer, it is 4 lakhs. On this, you provide depreciation. So on 43.25, you provide 15%. So that is 6.49. Because both of this are more than 180 days. Both of this are more than 180 days, whereas your computer is less than 180 days. So what you need to provide is only half of the depreciation. So now for computer, out of 4 lakhs, computer is 40%. So computer is 40%, but being a thing, I can only provide 80,000 depreciation. So my out of 43.25, I can on 6.49 is there and 0.8 is there. Now I can provide additional depreciation. On this, I can provide additional depreciation. So what I do is, sorry. So here, what I'll do is I'll split it as half and full year. So full year, half year. So as far as this, your 25 and 10, for this it is full year depreciation. So it is 35.25 into 15%. But whereas for this 8, you only provide 7.5%. Correct? Same way for year also you provide 4 into 7.5%. So that's how you actually compute. So it is 35.25 into 15%. So it is 5.29. And for your additional asset, 8 into 7.5%. So that is 0.6. And for computer, as we computed, it is 4 into 7.5%. That is 0.3. Sorry, if computer is 20%. So 4 into 20%. That is half of your this 40%, that is 8. So this is your full year and half year depreciation. Now, after this, we need to provide for additional depreciation. Additional previous year 21-22, there was already an asset which was already purchased for 10 lakhs. So for that, they would have provided 10% earlier. Now we need to provide 10%. So 10 into 10%. They would have provided that already in the earlier year. So which means for that, we need to provide 1 lakh now. And for what is purchased current year, that is machinery on 1st September. Rest are all for this office use. So this 1st September 2022 was how much? 10 lakhs. So for this 10 lakhs, 10 into 20%, that is 2 lakh. So for the rest of the thing, you are not eligible to claim depreciation. That is no additional depreciation. So 5.89, 5.89, and then your that is your 5.89 plus 3, right? So 8.89, and this is 0.8 lakhs. So that is the total depreciation which is eligible. So with that, we have completed this. Yeah. Dhyanesh, how do you know Darjeeling is India or not? It's a difficult thing only. I think we'll have to know at least the major cities and other things. Otherwise, it puts you in a difficult thing. So you actually need to know whether at least the base cities are in India or not. Very rarely they will actually tell you, comma, the country. It's a very rare thing, but you will have to know. Abdul, yeah. See, for the calculation of this WDV, I did it as a whole. For only depreciation, I did it in columnar. Generally, you'll have to do blockwise. So each block has to represent a depreciation, as we have done here. So this is how you generally have to account in a separate column. So WDV, I've done it whole. So you'll have to do it columnar only. So I think I've put it rightly. So basically, what we have done is we have taken the WDV of the respective block. We have calculated how much is full year depreciation for the entire asset and what is eligible for half year we have calculated. And then we have taken additional for the last year's asset. We have calculated balance 10%. And for the current year additional depreciation, we have calculated. So that's how we have computed this. So with that, we have completed this problem. We'll continue solving problem after taking a short break of 10 minutes. So thank you. So, welcome back after the session. So, we'll continue with solving the questions. So, the next question is question number 3 in your study material, which talks about examine with reasons the allowability of the following expenses. So, Mr. Manav has been inquiring. So, he is a wholesaler. So, he is a wholesaler. So, we need to see whether it is relevant or not. Wholesale dealer of commodities and while computing profit and gains. Construction of school building in compliance with CSR activities amounting to 5,60,000. So we are talking about CSR activity. So whatever it is, moment you read the word, it is for CSR activity. What should you remember? Section 37 specifically provides that CSR is not allowed. So what you can do is you can just say Section 37 allows expenditure that are not in the nature of capital receipts, not in capital expenditure, not in the nature of personal incurred for the business. You write all that and then you say, however, explanation to Section 37 provides that this whatever has been incurred for CSR, whatever was incurred for CR shall not be allowed as a deduction under that Section 37. So accordingly, what happens? This 55 lakhs, this 5,60,000, whatever is incurred towards CSR activities is not an eligible expenditure under Section 37. Next is purchase of building for the purpose of specified business. So it's a specified business, right? So it's a specified business. Setting up and operating a warehousing facility for food grain amounting to 4.5 lakhs. So what about this? So we are talking about 35 AD. We need to see whether building is an eligible expenditure. See, in 35 AD, what is not allowed is land. Building is an allowed expenditure. So whatever is Manav has incurred is 4,50,000 is eligible if he is opting for deduction under Section 35 AD. So whatever purchase of building in purpose of specified business, whatever he has done is eligible because 35 AD allows 100% capital expenditure other than investments on land, goodwill, financial instrumentation. It does not specify building. Where did we say building is also not allowed? In scientific research, in-house research and development, building is not allowed. So please understand where it is allowed, where it is not. We are talking about 35 AD. We are just going to Section 35 and also understanding that, saying that building is not allowed that, but yeah, when you do that, you get a grip on that provision. So that's what I've been recommending you for quite some few days. So all what we need to do is we need to link provisions. When you read the word building is allowed under 35 AD, I'm just going back and remembering that building is not allowed under scientific research. So the question itself is to confuse you between scientific research and this specified business. There building is not allowed, here building is allowed. So only that. So it is basically allowed. Next is interest on loan paid to Mr. X, 50,000 on which tax has not been deducted. The sales for the previous year was 202 lakhs. So basically there is an interest on loan paid to Mr. X, which is 50,000. Tax has not been deducted and the turnover is 202 lakhs, which means if it is this typically is what you call this typically is a TDS provision. So whatever is relating to TDS, we'll just understand here. Typically, when it comes to TDS, if something has not been deducted, it is disallowed. So let's assume in this section, TDS has not been disallowed, which means under Section 40A, Clause 1A, which talks about TDS to residents. So that is domestic payments is disallowed. So how much is disallowed? 30% of this 50,000. 30% of 50,000 will be disallowed, and this 30%, whichever has been disallowed, can be claimed as an expenditure in subsequent year when TDS has actually been deducted. Okay. Next is commodity thing, which is 20,000 paid on sale of bullion. So commodity transactions, whatever is there is allowed as an expenditure under 36. Your security transaction tax, your commodity transaction tax is an eligible expenditure. So this 20,000 that has been paid as commodity tax is basically allowed under your computation. So that's the thing about this question. So next is question 4. I will actually skip question 4. I think I have some different questions to cover. So what we'll do is we'll skip question 4 and move on to the next question. which is basically based on a mock test series provided by institute. So we'll try to see in the exam level questions, whatever we have seen so far, the last questions or even the illustrations of study material is to prepare you to come to this exam level question. But what we'll currently be seeing is an exam question, is how you will be actually questioned during the examination. So we are going to see how you will be tested during the examination. So we'll go through that. Okay. Dhyanesh, I think you remembered section 35. So building is actually not allowed in 35 only. Good, Dhyanesh. Okay. So now we'll move on to this question, which is typically like a case study. So your MCQs will predominantly be kind of case study where you will be given a particular situation, and then based on that situation or based on that story, we'll use the word story. Based on that story, you are questioned. You are questioned with 5 MCQs or something. So we'll just go through how it works out. We'll see Mr. Raj is aged 45 years, commenced operations of the business of new 3-star hotel. Okay. We'll have to see whether it is relevant. So it must be an at least of hotel 3-star. So what section are we going to talk about? Once you remember that it is 3-star hotel, we know that we are going to talk about 35 AD. Okay, 35 AD. So what does it say in Mumbai, Maharashtra on 1st April 2022? He has incurred capital expenditure of 90 lakhs on land. Okay. So in 35 AD, what are all not allowed? 3 things, right? In most of the income tax, you see this 3. So what is not allowed? Land, goodwill, financial instruments. So when you read the question, your mind should be going back and forth to the provision as such to understand what is exactly allowed. So incurred capital expenditure of 90 lakh on land in March 2022, exclusively for the above business, and capitalized in the books on 1st April 2022. What does the pre-expenditure talks about? In 35 AD, it says if you have incurred an expenditure before your capitalization day and capitalized on that commencement date. So which means you have purchased earlier, but you are capitalizing on the date of commencement, you can still claim 100% of that expenditure. But this expenditure is what? It is land. So land is not an eligible expenditure. So though he has capitalized on 1st April 2022, it is not an eligible asset. If it is an eligible asset, this would have been considered for deduction. Further, during previous year 22, he incurred 2.5 crores, out of which 1 crore was acquisition of land and 1.5 in building. Is building allowed in 35 AD? We said yes. We saw in some of the earlier question also. So building is also exclusive for the business. The payment in respect of above was made on account payee check. So which means they try to say that it is what section? 40A3 will not be applicable because it is paid in account payee check. The profit from the business of running this hotel before claiming this deduction is how much? Is 75 lakhs. So what has been made? The profit from this hotel business is 75 lakhs for this assessment year 23-24. So they are not opting for 115 BAC. So you can think whatever the provision you know about. Okay, now there are MCQs on this. What is the first MCQ? It says, assuming that Mr. Raj has fulfilled all the conditions specified under section 35 AD, what would be the quantum of deduction under section 35 AD, which is eligible to claim as a deduction for AY 23-24? Let's forget for time being it is MCQ, because I told you for MCQ, when it comes to numbers, you might have an answer for all the 4 also. So you should know the provision exactly to arrive at the number, because we were discussing that there are 3 ways of answering an MCQ. One is you know the answer. One is you leave one by one out and finally come out with the answer. The last one is guess. Never do the last one. Always choose first or second. Mostly when it comes to numbers, you should always resort to first option where you pick the answer straight away. So we are not going to see what are all the options available, but we are going to try to solve it. So how are we going to solve it? We are going to understand what exactly has happened. So it's a 3-star hotel. How much has he invested? He has invested 2.5 crores. And then there is an answer of 90 lakhs, correct? 90 lakhs. We'll keep it as 0.9. So 0.9 and 2.5. Land is not eligible. So we are ignoring this. This 2.5 is split into 1 and 1.5. 1 is not eligible. So what is eligible is only 1.5. That is for the building. So whatever has been incurred for the building alone is eligible. So how much is eligible? 1.5 crores. That is nothing but the question's term. This is 150 lakh. 150 lakh. Do we answer here 150 lakh? Yes, we have. Correct. So if you actually see, answer is there for everything. If someone thinks everything is eligible, 250 plus 90. The entire 250 lakhs plus the 90 lakhs of the preliminary, the answer is there. Only consider 250. That is only during the year you have an answer. 190. So for 190, I think there will be some mechanism to arrive at 190 also. If you actually look at it, every number will come some way come out with an answer. Only if you know the provision exactly, you will know the answer. So now how did you know it is 150? Because land is not considered as an expenditure, which means if you 190 is nothing but land alone is considered. Correct? 100 plus 90. So for everything, there will be a computation. So if we actually look at it, we are leaving out the land. So the balance is 250 lakhs, 150 lakhs. That only is considered as an eligible expenditure. So clear? Let me see if some of you have got the answers. Yeah, building allowed. Good, Yanesh. So we'll go to the next question. So the answer is 150 lakhs. So we'll move on to the next question, 1B, where we say, assuming that Mr. Raj has also another existing business of running a 4-star hotel. So this is also about 2-star. So it is an eligible expenditure. It's an eligible business. So what does it say? 130 lakhs. Okay, 130 lakhs for that year, in that particular year. So now for 23-24, what will be the income chargeable or loss under the PGBP is the question. Now we already know in that new hotel, okay, we'll call it as old. Old, they have said it is 130. How much is it in new? So we need to compute for new business. We already saw 150 lakh is an eligible deduction under 35AD. But what was the profit? What was the profit? Profit is 75 lakhs. So the 75 lakh is what is being actually claimed, right? So now out of 150 is your deduction, 75 is your profit. So we'll give you loss of 75 lakhs. Loss of 75 lakhs. So now the old business is a loss of 75 lakhs, which means it results in a total profit. Profit of how much? 130 minus 75. That is how much? 55 lakh. Okay. So now the answer is 130, 55 lakhs profit, 20 lakh loss, 15 lakhs profit. So these are the answer. Again, as I told you, for each of this number, you might get a back working. So if you think that is a provision, your answer will be something else. So you should know the exact provision to come out it. So we are seeing 130 here, 75 lakhs was the profit here. Please remember in the question, PGPP said profit of 75 lakhs. If you actually profit of 75 lakhs, so you might add 130 plus 75, you might get 205. And depending upon the adjustments, you might. So what is the exact answer here? It is 55 lakhs because it is 130 lakhs minus 75 lakhs because there is a loss of 75 lakhs in that new business. How did that loss come? It is 75 lakhs minus 150 lakhs of 35AD deduction. So your answer will be 55 lakhs. So every question is based on the case study or some tweaking, some adjustments to the case study. So this question says that he has one more business apart from what is discussed in the case study. Now moving on, if out of the amount of 1 crore paid acquisition of land, 50 lakh was paid in cash. So now they say whatever was listed out in your original question, original case study, the land was purchased using 50 lakh using cash. Now, what will be the answer to questions 1 and 2 above? 1 and 2 above. So now we need to first understand, will 35AD deduction change? Will 35AD deduction change? So that's the first question. So what was the 35AD deduction that we spoke about? We said he had actually invested of 90 lakhs of land, 2,50,000 of new year. So totally there was an investment of 340. In that 90 is land, it is not eligible, and 100 another land was not eligible. So balance, that is 150 lakh was only claimed. So now when land is not at all eligible to be treated as a deduction under section 35AD, does it matter whether it is paid in cash or not? Now, since it is paid in cash, should we do anything? No, because why? The entire land itself is not allowed. This entire 100 is not allowed. So you need not do anything. It can be paid in cash, not in cash. It doesn't matter. The entire expenditure can be claimed. So now, will the answer change? No. The first answer will continue to be 150 only. The second answer will continue to be 55 lakhs only. So both these answers will not change. So whatever we saw earlier will continue to be there. 150 lakh will be your deduction under 35 AD. 55 lakh will be your profit and gains, total taxable profit and gains for that particular year. Last question. Considering the assumption given in question 2 above, what would be the tax payable? So what is the total profit? 55 lakhs, correct? So now we need to compute tax for this 55 lakhs. So we need to compute tax for this 55 lakhs. So you can compute, right? So how does that work? We all know that the question says that he has not opted for any 115 BAC. So the regular tax rate. So the regular tax rate is what? The regular tax rate for a resident individual is first to 2.5, no. For next to 2.5, it is 5%. Then for next to 5 lakhs, it is 20%. For next above 10 lakhs, it is 30%. So you compute that and then you add surcharge because it is above 50 lakhs. Since it is above 50 lakhs, you add surcharge also and then you add cess to it. So how does it work? Let's say for first 10 lakhs. First 10 lakhs, it will be 1,12,500, correct? That's what it is there. So balance 45 lakhs. So for balance 45 lakhs into 30%, 13 lakh 50,000. So 13 lakh 50,000. So what happens? So it will be 14 lakh 67,500. So in this 14 lakh 67,500, you need to add 10% surcharge. So it is 1,46,750, leaving out how much? 16,14,250. On this, you need to apply add cess of 4%. So on this, you add 64,570. So what happens? It is 1678. I'm sorry, something's wrong. The total tax is 55 lakhs. So on 55, you take for first 10 lakhs, it is 1,12,500 plus 45 lakhs into 30%. It is, sorry, this is 14,62,500, right? 62,500. On 14,62,500, you compute surcharge of 15%. Sorry, 10% of surcharge, that is 146,250. 146,250. So on 16,08,750. So 16,08,750 into 4%, that is 64,350. So now you get how much? 16,7300. So that's what it is about. So this 16,7300 is the correct number. So the 16,7300 will be your tax payable as far as this person Raj is concerned, because he is a resident less than 60 years. So now we have computed the tax, giving out what is the thing. So we have arrived at 167300. So that will be the answer for this particular question. So that is about your how you are tested with MCQ. So generally there will be a case study. Based on case study, you are requested to solve various multiple choice questions. Correct? Correct. So many of you have participated. Yanesh, Shivlani, Vashishta, good. Doshi, Sindhu, Kavita. 1,12,500. How did, yeah. So good. All of you have answered. Doshi, Shivlani, Sindhu, Yanesh, Vashishta. Very good participation. Now, Kavita, how did this 1,12,500 come? It's based on how you have, you work out this first slab rate. So the slab rate is basically 0 to 2.5 lakhs, nil. Then 2.5 to 5 lakhs, 5%, right? So which means it is 12,500. So that is nothing but 2,50,000 into 5%. And then 5 to 10. 5 to 10. For 5 lakhs, you will take 20%. That is 1 lakh. So that is nothing but 5 lakhs into 20%. So up to 10 lakhs, your thing will be 1,12,500. So this 1,12,500 is how you have actually arrived at the first 10 lakhs. So on that you add for the balance 45 lakhs. So for the balance 45, it is 30%, right? So that's how you came out with that number. Okay. Good. So we'll move on to the next problem, which is also an exam level problem. I'm just moving on from the manner that we have been solving right now. I'm trying to put it into a system how you will actually get it in the exam. Your exam questions for business or profession will predominantly be in this structure, So you'll be given a profit and loss account, or sometimes I have a question for that type also. So one of the type in which you'll be solving the question will be this concept. That is, you'll be given a profit and loss account and some additional information. You'll have to combine these two and then solve the problem. If you actually look at this question, for your 11th and 12th standard or equivalent thing in your schooling, what would have happened is, you would have had this final accounts, right? So you will solve the final accounts where you prepare balance sheet and P&L. You will be given a trial balance, and beyond a trial balance, you will give some extra information. So you need to make some adjustments to the trial balance to actually arrive at the P&L and the balance sheet. So in the similar manner, you will be given a P&L and additional information. You need to adjust wherever required. So what is given here is Kamal is a resident, not audit resident of 58 years. He's been doing manufacturing steel business. Is provided with the following information. So now what is the information provided here? It is basically, you have a profit here, you have a business profit, and you also see that you have two other sources income. These are income from other sources, right? And I'll not call income from other sources. We'll call it as other incomes, or not PGBP. Okay, we'll put it this manner. I'll tell you why I'm explaining it like this. So sale of section 35 asset and winning from lottery. So now you have income that is categorized as some other income or whatever it is. So that's what it is about. Now we also have expenditures listed here. So all these are expenses, each expenses. Now we have given some extra information. We'll go into that extra information. We'll go one by one. I'll tell you a small method to probably understand how you need to do it. Now, we'll read the first line, okay? It says opening and closing stock. Please give attention to me right now, because I'm going to give an extra knowledge of how you are going to solve this, because it's little deeper than what you have understood so far. So let's put some effort and focus on this, what I'm trying to do right now. So it says opening and closing stock of finished goods were undervalued by 10%, which means whatever was in the books, whatever is in the books is 90, not 100. Whatever in the books is 90, not 100. So that's what it's meant, undervalued. So book value is something like 90. Instead of 100, they were quoted at 90. It's a number that I'm coming out. So opening stock in the book is 3,30,000. Closing stock in the book is 4,38,000. We need to make an adjustment of this. So your closing stock is higher. Your closing stock is higher. So I'll probably put something as, I'll call it as A. Okay. I'll call it as A, which means I'll write in my question near that explanatory information, a small value or some sign to say what I need to do. So I'm just trying to say that I need to adjust my profits to come out with the actual profit. So I'm just writing it as A to say that I need to do this. Salary and wages include following items: contributed 20% of basic salary in NPS. Mr. Ganesh was withdrawn basic of 4 lakhs. DA is 40%, out of which 50% is forming part of salary, which means, what does this mean? This means that you need to make an adjustment to the salary. NPS, only a proportion is allowed. Beyond that, it is basically not allowed. So what is allowed and what is not allowed? We said only 10% of salary computed is allowed. Beyond that, it is not allowed. So we need to compute that 10%. Whatever is the actual 10%, we need to compute and disallow the balance about 10%. So that's what we are actually computing right now. Okay. So we'll put it as a plus. Okay. We'll put a plus here to say that this must be added. Why am I doing this plus? Generally, whenever there is a business profit, there is already a profit provided in your P&L, which means what happens? Whatever is in excess, that is, you need to adjust that profit, right? When you adjust that profit, I'll just explain you. You have book profit. Okay. What you need to do is you need to make adjustments in accordance with section 30 to 43B to arrive at the income tax profit. So to this transformation from book profit to income tax profit, there will be four steps. Okay. 2 for expense, 2 for income, 2 for expense, 2 for income. So add minus expense. Similarly, add minus income. Okay. Now, what do you add? What is disallowed? Which means it is not an eligible expenditure. It is not an allowed expenditure in according, for example, 43B, which says only on payment basis. 40A, which says TDS must be disallowed. Expenditure on which TDS is not deducted is disallowed, right? So you need to disallow that expenditure. So you're going to add expenditure that needs to be disallowed. Then you need to reduce expenditure that are not provided in the books but needs to be allowed. So it is not there in your P&L, but it needs to be allowed as an expenditure. So you're going to reduce expenditure which needs to be allowed. So first step was addition of expenditure that needs to be disallowed. The second step is reduction of expenditure that needs to be allowed, which means it's not in P&L. I'm now providing it as a deduction. For example, 35AD. 35AD, you will have to provide as an additional deduction, 100% of capital expenditure, which means you need to reduce. So reduction is such categories. Similarly, income, plus, minus. What do you do which needs to be considered as an income? Something like add income. Okay, add income. Something like, if you want me to tell an example, it is deemed income. So deemed income is not provided in the books of account. You need to provide it right now in the income tax act. So addition is deemed income and reduce income. So when do you reduce income? An income which is not related to PGBP or which should not be treated as an income. So we'll call it as other income. It is not an income relating to PGBP, so I need to remove it. It is either not an income itself or it is not an income under PGBP. It is something else. So I need to reduce that income because what I'm going to compute is only PGBP. I need to compute what is taxable under business or professional loan. So these are the 4 steps. 2 additions, 2 reductions. 2 for expense, 2 for income. Correct? So I add disallowed expenditure. I reduce expenditures to be allowed. I add any deemed income. I reduce any income that need not be considered into PGBP. These are the 4 steps. So for everything, I need to classify whether I need to add or reduce. That is why I'm giving a sign of add here. The reason why I've given addition here is because it must be added to the books of account, added to the book profit to arrive at income tax profit. Clear? So that's what it is about. Now, some of the employees opted for VRS. VRS, we need to see what needs to be done. What needs to be done? VRS expenditure should be allowed only 20% per year. 20% per year. But what has been accounted in the books of account? The entire 3.5 lakh has been considered as an expenditure in book profit. But income tax profit, what should you consider? You should only consider 20%. This being the first year, because it is only paid on 1st January 23, which means you'll have to disallow 80%. You have to disallow 80%, correct? Because 3.5 is 100. I need to provide only 20. So I'll have to disallow 80%. So here also, I am putting a small simple. So in your question paper, just use pencil, okay? Use pencil. Give a small mark of plus or minus. So I'm saying the small plus to say that I need to add this. I need to add this. Next is interest on loan includes interest paid at 15% per annum on loan of 18 lakhs, which was taken from SBI on 1st July 22 for purchase of new electric car of 20 lakhs. The car is used for personal purpose. So it is a personal expenditure. What does section 37 says? Do not allow expenditure that are personal in nature. There are 6 conditions in 37, right? One of the condition is it should not be in personal nature. Once it is personal nature, it needs to be disallowed. So again, I give a small plus. I'm saying this must be added. This must be added to my expenditure because it is not an eligible expenditure. It is an expenditure that needs to be disallowed. Depreciation allowable as per the Act is 5,50,000, but during the calculation. So the depreciation of income tax is 5.5 lakhs. What should you do? You should actually reduce this. But I will just do 2 things, plus and minus. I'll tell you why. Because when you say depreciation, first you will have to disallow book depreciation. First you have to disallow book depreciation and then allow income tax depreciation. For income tax depreciation, what should I do? Apart from this 5.5 lakhs, there is an adjustment that I need to make for another car of motor car, which is a new addition, which has been left out while computing this 5.5 lakhs. They're not saying it is left out in your book depreciation. They're saying it is left out in your income tax depreciation. An asset was purchased for 7 lakhs on 17th November 2021 for conducting scientific research. So it is a scientific research, which means the 7 lakhs would have been claimed as a deduction under section 35 in that financial year, that is previous year 21-22. But now the asset was sold for a consideration of 9 lakhs. So the asset is sold now. So what is it called? It is a deemed income. It is a deemed income because a scientific research asset is sold. So I need to treat this as an income. I need to treat this as an income. I need to add this as an income. So now the question says compute total income. So what we'll do is we'll go so we'll say computation of total income. In fact, we'll do only PGBP, okay? We'll not expand beyond PGBP because I'll just stop it with PGBP alone because rest of the thing will be is something like the entire computation which will be taught to you in that separate chapter. Total income of Mr. Kamal for assessment year 23-24, okay? Always have a particulars column. Particulars. Always have particulars column. 2 amount columns. 2 amount column and a reference column, okay? 2 amount column and a reference column. Okay, so now the first thing that we need to always start with is the book profit. So whatever was actually booked in your book as a profit. So whatever was the net profit, okay? Net profit. So what is your net profit in your question? It is 23, 82, 500. Okay. So you take 23, 82, 500. As I told you, you need to do first for expenditure and then for income. We'll start with expenditure. So we'll add expenditure not allowed. Okay. For each of this expenditure, we could have a working also. So what is first thing is what do you call it? Is called as contribution to NPS. Okay. I will know how many additions, how many deductions, because my question always talks about I already know how many additions, right? 1, 2, 3, 4, and 5 additions. So out of that, expenditure is 4. 1, 2, 3, 4 additions. So I need to make 4 addition as an expenditure. So for that 4, whatever I need to do is what I need to do. So first, what I'll do is I'll start with 4 lines, right? So then I have 4 additions. Then I have 1 reduction, that is depreciation, that is 5, and then 1 deemed income, that is an income to be allowed. Then this adjustment to stock. So totally, I will know how many line items it will come. So let's say 8 or 9 line items. What I can do is I can leave gap for that much of items and then continue my working straight away in the note. So by practice, you will know what exact gap you need to provide, and then you will start your notes. So what we'll do is we'll put as notes. I'll not do anything right now. I'll just write the shell of the structure and then continue on. So the first thing is contribution to NPS. The next thing is some of the employees opted for VRS. That is next thing, right? So VRS under section 35 DDA. Okay. We'll write it as 2. Okay. For everything, we'll write a note. So as I told you, note is very critical. Why? Because that is the one that will let the valuer know that you know the provision. So it is knowing someone that you know. It is very important for income tax or any law subject. So always write notes. So the next, so this is 2 addition. The third addition is interest. That is personal, right? Interest under section 37. So I'll put as note number 3. Is there anything else I need to do? 1, 2, I have done this, NPS, this. So next is depreciation, book depreciation. I need not write note for this. It is straightforward. Book depreciation. So I will have a total year. Okay. I'll have a total year because I have added all the 4. 1, 2, 3, 4. So with that 4 expenditure adjustment, I'll have a total year. I'll write something here. Then I will start with, is there any expenditure that I need to less? Is there any expenditure that I need to less? It is depreciation. So I'll say next is less depreciation under section 32. So I will put a note again because I need to rework, right? I need to rework the number. So now I'll have the depreciation here. Next is after depreciation, I will add deemed income, right? So add. So we have couple of income. So now this income is one thing, and this is deemed income is one, and closing stock is one. So I'll write it as undervalued stock. So I'll write working 5. Then I will write what you call deemed income. I'll write it as 6. Okay, I'll write it as 6. So that is deemed income is for the scientific research asset. So all that is taken care. Now I'll finally have my profit and gains from business or profession. So this is my structure. Okay. So this is going to be my structure actually. So now I'm stopping it here. Now I know the exact spacing. So I can start my notes. Remember, I have not filled even one single number. I only filled the net. So for this, you need lot of confidence to feel that you have not done anything, you have not left out anything. So that becomes very critical. Actually, now I myself have left out something. I'll tell you what. Okay. I covered the explanatory information. I forgot to tell you that something has to be done in this P&L itself. Winning from lottery. Is that business income? No, it is income from other sources. So we need to reduce this. Similarly, profit sale of section 35 asset. 35 asset is being treated separately as a deemed income. Any sale of asset will not be considered under the books account. So generally, when a depreciation, we'll see in capital gain when profit must be booked. So for sale of assets, since it's related to scientific research, since we are dealing it separately, this also should be reduced. So now what we do, less income treated separately. Income treated separately. On that, I say sale of asset, sale of section 35 asset. Then I say, what income was that? Dividend is it? Sorry, lottery income. Lottery income. Okay. So now I need to list this. So I'll have a okay. So now I'll have PGBP income. Okay. Okay. So now this is how I do. I'll just do a total here. And this will be there. Okay. So this will be the shell structure. So now I have 6 nodes. If you want, you can write the same deemed income code for this also. So the sale of asset also comes under 6 only because it's the same explanation. We are treating it deemed income, hence we are removing it from here. So we'll start from the nodes. Okay. Notes 1. What are we saying? We are saying contribution to NPS. So we'll compute eligible NPS. So what is an eligible NPS? 10% of basic plus DA forming part of retirement. Okay, we'll call it as DA retirement. Okay, DA retirement. So dearness allowance forming part of retirement benefit. Only this is considered. So this only is an eligible NPS. So how much is 10% of what is basic salary? Basic salary of that particular person is 4 lakhs. Okay, 4 lakhs plus 40% is basic salary. Sorry, NPS is 4 lakhs. 40% of basic salary. Okay, 20% basic salary. Ganesh has withdrawn 4 lakh as basic salary. 40% is basic and 50% is DA. So now what is happening? Basic is 4 lakhs. Plus 50% of dearness allowance is only retirement benefit. So it is like 4 lakh into 40% into 50%. Correct? So how much is it? 10% of 4 lakh plus 4 lakh 20% is 80,000. So 10% into 4 lakh 80,000, which is nothing but 48,000. Correct? 48,000. Now on this, so we'll call it as not allowed. Not allowed is how much? Not allowed is what is actually being paid is 20% of 4,000. So 80,000, which is nothing but 20% into 4 lakhs. That is what is being deposited minus 48,000. So what is not allowed is 32,000. If you want, you can do it as a table format also. I'm just doing it in like a form theory or formula or something. You can do it like a columnar format also. Calculate the NPS and then compute it. So now this 32,000. So now this 32,000, you fill it up here. So 32,000 contribution to NPS is actually disallowed. And next is, we said VRS expenditure in 2, right? So VRS under section 35 DDA. Okay. So basically 20% into how much was paid. Okay, once you have done, you can strike off. Now I've completed NPS, I've written it above. So I'm striking it off saying that I've completed. So in all your small adjustments, you have to strike it off after you're doing it. So this 3.5 lakh is the thing. So which is nothing but 70,000, correct? 70,000. So what is actually allowed is 70,000. So we'll disallow, okay? We'll disallow the balance 80%. That is 3,50,000 minus 70,000. That is 2,80,000. So this 2,80,000, I'll go and fill it up here. Come back to the question, strike off this. Do stepwise, do systematically so that you don't skip anything. Go through the entire question. First mark whether you need to add, reduce, or what should you do. Then create the structure, create the skeleton. Then start your workings. Once you complete one working at a time, go and strike off that you have completed the adjustment. Only then you will know that you have solved it. So now we have completed. The third one is the interest on loan. Interest on loan is basically, it is completely personal. So 15% on 18 lakhs. 15% on 18 lakhs will not be allowed. But only thing is, it is taken on what date? July 22. I told you each word might give you explanation or might be irrelevant. Please understand here what are they saying? The loan is taken on July 22. So how many months interest will be booked in the books of accounts? 9 months interest from July to March. So only 9-month interest we need to disallow right now. So it is interest. So interest, I can add on working here again. Interest is basically what is the loan amount? 18 lakhs, right? So 18 lakhs into 15% into 9 by 12. So how much will it be? 18 lakhs into 15% into 9 by 12. So 2 lakh 2,500. You write saying that considering that interest is on loan for a personal car, the same shall not be allowed under section 37. So you can write in your own words. The point that you need to convey is it is personal nature, hence it will not be allowed as an expenditure. So this 2,02,500, you go here, you write. Okay, 2,02,500. And finally, we say book depreciation. So what is the book depreciation? It is 9,25,000. So now what is the total disallowances to be made? 32,000 plus 2,80,000 plus 2,02,500 plus 9,25,000. So totally 14,39,500. So what do I get? Plus 23,82,500. So what do I get? 38,22,000. Next is depreciation under section 32. So we are going to compute depreciation under section 32. Generally, or even practically doing, depreciation will be the last adjustment we are making in our computation. The very simple reason is because we need to know how much is unabsorbed depreciation, right? So if you're keeping it as last, you will know whether your loss is because of depreciation or not. So generally your book, the income tax depreciation will be the last item that will be adjusted, just to understand how much is unabsorbed. But here I've written at the beginning, it's okay. It's not wrong and all. Just that for comfort of identifying how much is unabsorbed, usually it is being adjusted as the last line item. So how much is depreciation? Now we need to know what is it worked out. So basically calculated under section 32 is how much? 5,50,000, right? Calculated under section 32 is 5,50,000. So whatever is calculated is 5,50,000. Add car, right? It was a car which is basically purchased on 25th September 22, which means it is eligible. It is eligible for how much percentage? The entire depreciation. So car is motor car is basically 15%. So the entire car depreciation is allowed, right? So 3,50,000 full year depreciation can be provided into 15%. So how much is it? 35,000 plus 17,500. So 52,500. So it is 6,02,500 is your income tax depreciation. 6,02,500 is your income tax depreciation. Go here, write as 6,02,500. So what will be the minus? 38,28,000. So 38,22,000 minus 6 lakh. I get confused with my own handwriting. Now I have a doubt whether I've written 6,62,000 or 6,02,000. 6,02,500. 32,90,500. I need to less 32,19,500. Next is undervalued stock. We are adding undervalued stock on deemed income. So how much is this undervalued stock? The question says opening stock minus closing stock is undervalued by 10%. So what we'll do is we'll write 5 undervalued stock. Okay. So generally what it is, closing minus opening. That is how you represent in your books, right? So closing comes in your sales side, opening comes in your purchase side. So that's what you do. So closing as per the books is 4,38,000. And the opening is 3,30,000. So the difference is how much? 1,08,000, right? 1,08,000. Now this 1,08,000 is undervalued by 10%. It is what? It is treated as 90. We all remember in our old school, right? Cross multiplication. So what does it say is generally what is actually represented is undervalued by 10. So this 1,88,000 is like 90. So what you need to do is, so I'll tell you the actual valuation. So the undervalued. How do you do 1,08,000? This is equivalent to 90. This is equivalent to 90. How much is it for 10? So this is how do I do? Generally, will tell you this 1,08,000 is equal to 90. Okay. We need to understand how much is it under. How do you cross multiply? You do this. So it is 1,08,000 into 100 divided by 90 will give you the total closing stock. Now you need to know only the undervalued. So now what we are doing, we are only computing for 10. So we are computing for 1,08,000 into 10 divided by 90. This is a very basic cross multiplication function. It is undervalued by 10, which means what is there in your book is 90. What is there in your book is 90. It has been, you need to add 10. You need to add 10. Please remember what is there in the book is 90. Now you are going to add by another 10 to bring it to 100. So you're identifying how much is that 10. So 1,08,000 divided by 90 into 10. So what will be the number? It will be 12,000, right? 1,08,000 divided by 90 into 10. Yeah. So it is 12,000. So I go here, I need to add how much? 12,000. And deemed income is sixth thing. What is deemed income? Deemed income, we were talking about scientific research. Scientific research assets sold. So what does section 41 says? 41 says sale consideration. Sale consideration or deduction under section 35. Okay. So what is sale consideration of the property? Okay, now we have completed this. We have completed this, right? We have completed everything. Now we are here in this number, sale consideration, purchased of thing. So whatever the 7 lakhs and 9 lakhs is about, we have also completed this adjustment. So here sold for a consideration of 9 lakhs. Now I'm doing it at the end, but whenever you are completing, you should make a practice that you are coming and striking off the sign to see that you have completed. So sold for a consideration of 9 lakhs. So it is 9 lakhs. What was the deduction under section 35? It is basically the cost. 7 lakhs would have been treated as a cost in that particular year. So 7 lakhs. So what is the actual thing under scientific research? Scientific research says whatever you are treating your asset, that is sale consideration or the deduction under section 35, whichever is lower. It is like well. Okay. What is well? It is a water tank, right? So you see deep, it is deep. So lower. So the lowest number should be taken. So 9 lakh, 7 lakh, whichever is lower. So for scientific research, for deemed income, it is well, which is whichever is lower. So I need to consider 7 lakh as my deemed income. So I go to 6, I write 7 lakhs. So my total number. So my total number that I'm going to adjust is 7,12,000 from what 32,90,500. So it will be 25,7, right? 25 lakh 7,500. Okay. Now for 6, we also have to write a note saying considering deduction being lower, the same shall be deemed income. Deemed income under section 35. Further, profit on sale booked in P&L needs to be should be added to income. Should be not added, reduced. Should be reduced from income. So we go to the P&L, understand how much it is, 2 lakhs. So we go here. So I need to reduce 2 lakhs. Then lottery income of 67,500. This should also be did because it's not a business income. 67,500. So it is 2 lakh 67,500. So 25 lakh I have reduced. So we need to add, right? So 32 lakh 32,19,500 plus 7 lakh 12,000. So it is 39,31,500 minus 267,500. 39 lakh 64,000. 39 lakh 64,000. So that's the basic thing. So just see whether my numbers are correct. So 23,82,500, 23,82,500 plus 32,000 plus 2,80,000 plus 2,02,500 plus 9,25,000. That is 38,22,000 minus 6,02,500. That is 32,19,500 plus 7,12,000. That is 39,31,500 minus 267,500. That is 36,64,000. I will just write it again. 36,64,000. So that will be your business income, correct? So whatever your business income is 36,64,000 after taking all those. So now we have considered everything. So we need to go and recheck whether we have considered everything, every adjustments that we have pointed out, and finally come out the number. So we'll have to be very focused, very careful, because we might make a mistake in totaling. We might reduce something which needs to be added. We might do vice versa or whatever. So everything has to be taken care. Each and every step must be done with focus. How do you get this into it? By practice. You need to keep doing, keep solving many problems at a time. Only then you will be get it. I'll try to solve something. So only when you keep on practicing about this, only then you will get used to it. But stock was undervalued, then we should make it higher. We have actually added, if you actually look at it, the stock, whatever undervalued, we have only added. So this 12,000 is an undervalued stock. So we are adding up to our income, because closing stock, higher closing stock will increase your income, will increase your profit. So we are increasing it. Danesh, this kind of question will be something like 12 marks or something like that. Whatever we did now will be probably will add it with a couple of other incomes. The total income computation will be a 16 mark or 14 mark question. Only with PGBP, whatever we worked out, it's something like 10 to 12 mark is the proportion. Doshi, there is no order of what you should do first. You can add first or reduce first. Generally, we add first to get what you call it. It's a general practice. So you add expenditure that are not allowed, then you reduce expenditure that are not allowed, then you add income that needs to be considered, then you reduce income that need not be considered. So it is your way of doing it. My only thing is depreciation is generally kept at last and not here. That's what it is about. Will the lottery not be taxed? It will be taxed. The lottery income will be taxed under income from other sources. So when you're computing a total income, after PGBP, you need to compute your income from other sources. There you will say how much is your lottery income. So that's what it is about. So that's why we are removing it, because it's not a PGBP income. So that's why we are saying it as income treated separately. Income treated separately. Subhashish Patra, what if it is a specified asset? Specified asset is not considered as a deemed income. So specified asset will be considered as a capital gain, whatever capital gain. So that will be discussed in capital gain chapter. Kavita, 20% and 80% VRS. What I actually did was, generally VRS says 1/5 of the expenditure, correct? So as far as this VRS is concerned, I have spent 3.5 lakhs. I need to write off for 5 years. So which means every year I'll write off 70,000. But in my books, I have already provided 3.5 lakhs. In my books, I have already recorded 3.5 lakh as my expenditure, which means I need to remove 80%. I need to remove 80%. Either you can add 3.5 and reduce 70, or just add 2.8. So that's what I've done. So I've added 2.8 alone. Otherwise, you need to add 3.5 and then reduce 70,000 alone. So that's what you need to do. So that's why it's 20%, 80%. Every year, 20%. This is the first year. So what should be provided is only 20% of 3.5 lakhs and not the other 80% is actually disallowed. Sale of section 35 assets mean, Kavita, the section 35 is about scientific research. Since you have already claimed 100% deduction, you need to only provide you need to provide sale consideration or deduction, whichever is lower will be considered as a deemed income. So 35 is about what? Is about scientific research asset which has already been claimed as deduction in the earlier years. So that's what it is about. So how was this problem? Like, how was this exam problem? Because this is how we generally solve it. So what we can do is, I think it's 9:35. I'll just discuss this problem alone. I'll not solve it. I'll discuss it and then probably we'll wind up. So Anmol is age 67 years. So as I told you, each word might be relevant, might not be relevant. Now the 67 years is relevant because if it says compute tax, 67 years becomes important. So he has reported a profit of 3.95 crores for the previous year 23 after debiting. Please remember the word after debiting. So all this what we are going to see right now is already been considered, the debit and credit. So the debit is 50,000 is paid to a restaurant in cash where no checks are accepted. Does it matter? It does not matter. So if it's a restaurant, you will have to pay it. If it is more than 10,000, you will have to pay only by account pay, check or prescribed electronic modes. So this 15,000 is not an allowed expenditure under section 40A3. So I add a plus here. So from that profit, I need to add this. 35,500 contributed to an university approved and notified for scientific research. It is an eligible expenditure, correct? So 35, 100% of whatever I'm donating, I'm depositing. 100% whatever I'm depositing to my to another institution which are eligible for scientific research, I can claim this as an expenditure. So this 35,500 is nothing like I need to remove this my profit and loss account. I need to add this from my profit and loss account because I need to provide it as a deduction. I need to do a minus. So in short words, I need not do anything, right? Because I need not do anything because 100% is already allowed. This 35,500 is already there in my P&L. So I need not do anything further. So I need to leave it as it is. I need not do anything. So I'll leave there. Interest paid 1,75,000 for purchase of vehicle for his wife's use. Similar to the last problem, this must be added. He received 3 lakhs from a debtor, which was written off as a bad. So it's a bad debt in the year 17-18. So it is written off in the previous year. Amount due from the debtor, which was written off, was 4 lakhs. Please remember what was written off in the books of account. Was 4 lakh as bad debts. But tax officer has only allowed 2.5 lakhs. Tax officer says, see, your bad debt is not 4 lakh. Your bad debt is only 2.5 lakhs. So the actual bad debt in previous year, 17-18, will be 2.5 lakhs. The actual bad debt is 2.5 lakhs. The whatever is 2.5 lakhs. So this 2.5 lakh is basically your whatever this 2.5 lakhs. This 2.5 lakhs will be treated as is your actual bad debt, not 4 lakhs. But how much has he received rightly? He has actually received 3 lakhs, which is above 2.5 lakhs, The 50,000 becomes deemed income under section 41, right? So how much is deemed income? 50,000 will be treated as a deemed income. So I need to reduce. I need to add as an income. I need to add 50,000 as an income. He sold some goods to his brother for 6 lakhs. The fair market value of such goods is 9 lakhs. So he has sold at a lesser price. For 40A to B, we said whatever is excessive or unreasonable needs to be disallowed. This is a sales. 40A to B only talks about expenditure, not about income. This is an income, so I need not do anything. But just for theoretical purpose, I'll tell you, in brothers' books of account, 3 lakh will be disallowed in brothers' books of account. But whatever we are dealing is Anmol's books of account is only sold for a lower rate. Nothing needs to be done. So now, whatever is there will be considered here. Okay, so this nothing needs to be done. So we'll leave this aside. So apart from that, depreciation in books of account is computed by applying the rates prescribed under income tax laws. So the book depreciation itself is income tax depreciation. So you need not do anything. So you need not add unless anything. We will leave it. Anmol purchased a new car of 14 lakhs on 1st August, and the same was put to use in the business on the same day. No depreciation further has been taken on the car in the books of account. So it is for the business, so it must be taken, but it says it's not provided. So we need to provide both regular depreciation and we need to see whether additional depreciation is required. No, even if he is a manufacturer, car is a road vehicle. So it is a normal road transport vehicle. So it is not eligible for additional depreciation. So we need to provide depreciation alone, the regular depreciation alone. So that's why you will have to compute for this problem. So you need to reduce this depreciation alone. So this is what you need to do for this problem. You can try solving it on your own. If you have some doubts, maybe we can discuss it in the next class. Okay, I'll take some questions and wind up for the day. Subhash's 35 AD is deemed to be a PGBP income. Yeah, sorry. See, as far as 35 AD asset, what you need to do is you need to treat the cost, right? The cost would have been claimed deduction 100% under section 35 AD. Now, if it is subsequently sold for not being used within 8 years, moving to another business or not being used for the specific business, what you need to do is you need to provide depreciation till then, calculate depreciation till then. So this cost minus depreciation, this value becomes your WDV. This becomes your WDV. Now, whatever your sale consideration, if this WDV becomes this WDV will be treated as your new cost, right? So the difference will be treated as an income. So nothing but the depreciation adjustment will be treated as an income under 35 AD. But if you have a sale, whatever sale minus this WDV will be treated under capital gain. What is discussed under business or profit is only this depreciation portion. So this depreciation portion must be treated as an income so that you are writing off everything. So that's what it is about. Or we need to do something. Okay. Vashishta, for this bad debts, for 4 lakhs, for this bad debt 4 lakh is previous year. That 4 lakh was adjusted by the income tax officer as 2.5 lakhs. So as far as now we are concerned, the actual bad debt for that year is 2.5 lakhs and not 4 lakhs. So our calculation should be based on 2.5 and nothing needs to be done on 4 lakhs because it is revised to 2.5. Currently received is 3 lakh. So the excess 50,000 alone is treated as income. Okay. So any more doubts? Subhaji, is that clear right now? Whatever is discussed on 35 AD? So if there is nothing more, probably we'll close for the day. So with that, we are completing all our PGBP related areas. So the complete PGBP is done. So from next class, we'll start with capital gains for computing for various assets. How do you do? So with PGBP, we are done. We will continue with capital gains in the next class. So thank you for the wonderful session. See you in the next class.